Hello traders and welcome to another video review. Today is Friday, October 7, 2022. This is the NFP day. So let's take a look at the Forex calendar to see exactly when this very important event is scheduled for release. Some data had been published already anyway, and those data are from China. Caixin Manufacturing PMI and Manufacturing PMI were, of course, published deep in the night, 3:30. To be more specific, the other very important event is the European Union Leaders Summit that starts at noon today, but all eyes of the financial world are focusing right now on the non-farm payrolls data from the US. This data and unemployment rate are scheduled for release at 2:30, so we should be prepared to stay focused, to stay more vigilant during this trading hours. So the NFP report is one of the most significant financial releases and market movers. Measures the number of people employed every month in the USA, excluding farm workers, non-profit organizations and private household employees. As a general guideline, a higher than expected figure might be considered positive for the American dollar, while a lower than expected figure might be considered negative. So what to expect from today's NFP release? The NFP report will be, of course, released at 2:30, and please remember that the US gained 315,000 positions in August, beating the expectations for the 7th time in 8 months this year. The US is expected to have a slowdown of around 250,000 new non-farm jobs in November. So the dollar and stock markets are set for roughly any outcome. However, if the NFP number beat the expectations of 250,000, then of course it's more favorable for the greenback, and it's of course against the shares. So there is one more thing worth to mention: unemployment rate. The unemployment rate has a high impact on the Forex, stocks and the other markets and the economy, of course. So the number of 3.7% is roughly one of the lowest ever recorded in a US history. So any decrease in the unemployment rate will be again in favor of the US dollar to fly higher. Employment change from Canada scheduled for release at 2:30 as well. So non-farm payroll day, non-farm payrolls, the highlight of the day, unemployment rate, and we have to say just a little bit about the average hourly earnings. There are medium impact data. However, please stay with me. Here, let me just focus only on the data from the USA. It will be much more easy because we will look at this anyway only. So of course we have some speeches today as well from the FOMC member. However, everyone will look at the NFP payrolls. Average hourly earnings, as you can see, are expected to decrease from 5.2% to 5.1%. So we should see some sort of slowdown again in average hour earnings. Please notice the fact that this time any number that beats the expectations is again in favor of the US dollar, because people want to be paid more by the hour on average, of course. So that's the thing. So this is the three most important parts of the US job reports, non-farm payrolls, unemployment rate, and average hourly earnings. So let's now dig in to the charts. Let's start with the euro dollar. So as you can see, for our chart of the euro dollar is set for the NFP. The market is positioning itself already. We got the wave A from the parity level to the downside towards 9,835. We got the wave B. It jumps up towards the level of 9,927, and then of course we have the extension of the wave C towards 50% of the retracement of the whole recent almost 5% advance in the euro dollar. So we got 3 waves down, which means it's corrective movement. Okay, so if it is a corrective movement, we can of course still dig a little bit lower towards 9,751, 9,737. This is the technical support level, or even 61% of the Fibonacci retracement at 9,713. However, if this is an impulsive wave, it looks kind of an impulsive-ish. I didn't actually count this one yet. So if that's the wave 1, if that's the ABC of the wave 2, so that's the correction into 50% of the Fibonacci retracement of the whole move up, or wave 1, that's fabulous. That means we are preparing, the market apparently, not we, but the market is preparing for a rally higher, basically in wave 3. So if this setup is correct, if this ABC correction to the downside is terminated, is completed, and so far it looks very good for the termination of this correction, the next wave we should expect is wave 3 to the upside on the euro dollar. Okay, any breakout lower of course invalidates this scenario. What then the US dollar index should do? If the euro dollar is positioning itself to go up, potentially, remember, potentially positioning itself to go up. Let me just calculate a little bit about the US dollar index. Please take a look at this. It's exactly 50% of the retracement, 112.36 of the last wave down, of the last minus 4% correction. Okay, so euro dollar went up went down 50%, US dollar went up 50%, directly opposite correlation, like we call it negative correlation. US dollar goes up, euro dollar goes down, and the opposite. Okay, so the US dollar index is positioning itself for another extension to the downside, and if we have the top, temporary top for the US dollar, if that was wave A to the downside, if that was the wave B, or it might be completed at 61% at 112.92, then of course we are missing the wave 3 to the downside. Where is the projected level for this wave if the 50% is the top for the wave B? So if this is the top for the wave B, the projected level based on the market geometry is located just above the technical support. 100% is located at 107.77, technical support 107.45. so this area here, let me just remove the 161%, so that might be misleading. There you go. This area here is a potential target for the wave C if there is very strong sell-off, which means the potential decline is minus 6% or even minus 6.55%. So please keep an eye on the US dollar index as well. So this is the next market that will react on the NFP payroll is of course the S&P 500 index. So what is going on here? Alright, so this is a daily time frame chart, and the situation is a kind of a similar. Again, where are we right now on the on the S&P 500 index? If we put our Fibonacci retracement tool, we can see that here the retracement was even shallower because we bounced only towards 38% of the Fibonacci retracement. There's still 50% and 61% of the retracement ready, waiting ready for the market. So general rule is that if the US dollar goes up, the stock index goes down. So if the US dollar index is positioning itself to go lower, euro dollar to go up, then we should expect this market to go up, to continue the corrective movement. This might be as well a free wave corrective movement. So we have the wave A completed here. That might be some kind of a pullback for the wave B, and the targets for the wave C are at one of these Fibonacci retracement levels. Okay, so that's the S&P 500 plan for the NFP payrolls. And last but not least, let's take a look at some spot gold market, because gold might react on the NFP payrolls as well. So what's happened recently? Recently we just broke above the trend line on the gold market. This is daily time frame chart. And if there is a continuation of this breakout here around 1720, the high was made a little bit higher, the local high 1728. So we need to break above this level. We are already above the 30-day moving average. We need to stop, consolidate around the trend line and fly towards the next technical resistance levels. So now these levels here are the official supports: 1640, 1676, and the last is located at 1686. So those three levels are now technical supports. There might be some slight problem with 1735. However, the next target in case of the extension to the upside is 1753, 1780, 1787, and then of course the last correction high 1807. And if we get there, the gold will bounce over 11%, almost 12% from the low in 2022. So that's a massive rally on a gold, potential rally if everything will set up according to the scenario. So if there is a failed breakout or false breakout and the gold starts to move lower and starts to move away from this trend line, then we should expect another wave to the downside, just as you could see this wave here. So that might be a deep wave towards 1569. That's my outlook for the NFP payrolls. That's my scenarios for the NFP payrolls. Please again stay vigilant, stay focused during the data release, and let market guide you to the right levels. So I hope you guys like it, and I hope that we will see each other again on Monday morning. Thank you very much for watching this analysis, and I hope I think I can wish you a pleasant weekend. See you later. Bye bye.